Welcome to the BNB Investing Podcast for real estate investors. Fix and flippers and realtors exploring investment options with Airbnbs and short-term rentals through acquisition, leasing, or management to generate consistent monthly revenue. Join us for a chat with experienced and successful short-term rental investors to hear their story of how they got started and created wealth by building scalable businesses. We also explore various service providers and lenders that help make our businesses more efficient and maximize revenue in this awesome sharing economy. Welcome your host, Rich Munroe.
Hey everybody, Rich Munroe here with BNB Investing Group with our weekly Thursday 5 p.m. Facebook Live. Thanks for jumping on. We're going to be covering a topic today that's kind of very important if you're doing acquisition strategy with growing your short-term rental or your real estate business. And, BNB Investing Group looks at all the different options for investors, whether you're doing master lease or rental arbitrage, or you're doing acquisitions, or if you would like to manage properties for other investors. And so this week I have a good friend of mine on with us, David Del Vecchio. Thank you so much, David, for jumping on.
You're welcome. Pleasure to be here.
Good. And so David's got a vast amount of experience in the finance and mortgage space, and anxious to kind of hear what's going on in the industry today and kind of talk about some of the strategic options that are available to investors to acquire properties. And so, David, with that, if you want to give us a brief introduction.
Thank you. Well, pleasure to be here today. Thank you, Rich. Like you say, I've been in the mortgage industry since the mid-'80s. I hate to admit it because it makes me old. But I have a lot of experience. I've run across all sorts of deals. Years ago, I used to do owner-occupied, and they had to be excellent credit people. And I decided those weren't the people that really needed help. The ones that needed help had credit blemishes or improve their income, have experience, but they still wanted to invest. So those are the ones that I like catering to, because it gives me a good sense of satisfaction.
Okay. And so how long has it been that you've been focused on helping investors with mortgages?
Since the mid-'80s.
Oh, wow. Okay.
So, yeah. Not only have I personally owned and sold, I've done some flips, single families, apartment buildings, mobile home parks. I'm pretty versed in a lot of areas.
Okay, very good. So you've seen a lot of the upturns and the downturns in the market.
Oh yeah. I remember when it was 18%, it didn't matter how perfect your credit was. You wanted a loan, it was 18% interest. So.
Wow. And so talk to us about, if I'm an investor, I already have a mortgage on my primary residence, and I want to scale my business and be able to invest in property. What are the current options available to me?
Right now, if it's a purchase, you can do a fix and flip, where you can get, and I can do up to 100% financing of the acquisition price and 100% of the rehab. Now, those are difficult to do because it requires good income, good credit history, and provable and tax returns. You have to have 660 mid-score, and for 3 years you've had to have had an adjusted gross income in excess of $50,000. And you have to have at least two within the last 3 years for experience. Otherwise, I can do up to 90% of the acquisition price and 100% of the improvement.
Okay, so but back on the 100% financing piece for a second. So you have to have 2 of the last 3 years experience. Is there an X number of fix and flips you should have had, or is it any experience? Two? Oh, so 2 within the last 3 years.
Correct.
So if you've done 2 purchases and sales, whether you rehabbed it or not, it would be 100% financing.
I could, yes.
Okay.
As long as the rest of the conditions are good.
Got it. And that's also requiring a minimum of 50,000 a year in income, gross income,
Adjusted gross.
adjusted gross, and that can be through an LLC.
Usually, everything is going to pass through your personal return anyway.
Got it. So it's based on your personal return.
Okay.
Okay.
And that gets
And
carried forward 1040.
So if you have those qualifications, is it truly 100% financing, or is it, do you have to bring something to closing for the points?
Just for closing costs. The acquisition and
Just
the
for closing
closing costs would have to be out of pocket.
Got it. Okay. And then, of course, during the term that you're fixing the property, you would have to pay for the monthly interest-only payments
On the drawdown amount.
on what you draw down. Okay.
Right.
And then, if your exit is refinancing or if your exit is selling, you would then pay it off at that point.
Correct.
Okay. And you have options for that as well?
We do. Yes.
And what's the current marketplace looking like now for a refinance?
We've got rates that start at 6.375 if you're perfect. And you got 760 credit score, and everything just falls in place. The normal loans are somewhere around 8%, 9%.
Okay. And then on the acquisition, if you don't have experience, you can get financing for 90% of the purchase and 100% of the rehab cost, or just is it 90% across the board?
I can go up to 90%. Sometimes, depending on the property and the situation, it might be only 85%. But I can normally do 90% of the acquisition, 100% of the rehab.
And what's the minimum FICO requirement typically for that type of a loan?
Usually 660.
660 is a minimum?
Yes, I can get an exception maybe down to 640 range.
Okay, got it. We're starting to get a couple questions in the comments, and so we will provide towards the end of this broadcast, we'll provide the contact information for David. And then he can also send you guys kind of more specifically a list of the requirements that are typically needed. And so if you guys can hear us okay as well, just do me a favor and just put an okay in the comments. Just want to make sure that we're coming through okay. And so David, on the requirements for let's say it's just a retail purchase, right? So I'm not doing a fix and flip. But I want to buy a property. It's already been rehabbed, and I want to buy it for the purpose of doing short-term rentals. What are the terms going to look like on that particular purchase?
Typically, you're looking at 80% of the purchase price. So it would be 20% down plus closing costs.
Okay. And the 20% down... and is there a limit on how many properties you can do as an individual?
No.
So as long as you've got the 20% down payment and the minimum FICO score requirement, you can purchase as many properties as you want.
Correct. There are lenders out there that limit you up to 5 properties, but in my experience, I probably have a repertoire of 30 different lenders I go to. Each one of them has varying criteria.
Got it. So 30 different lenders for options, so you can basically be competitive with your terms.
Right.
In terms of when you're looking at a particular borrower's situation. And so talk to us about, a lot of us that, even real estate investors that get a lot of inquiries and don't necessarily have that perfect FICO score, as well as being self-employed. What are the different ways to be able to still qualify if you're kind of at the borderline and you don't have, easily reportable income?
Well, in some instances, I've been able to get situations like that. If I could get bank statements to show continual income that would debt service, then I can go with a bank statement loan. Because there's a
Right.
bunch of loans. Debt service coverage, the DCSR. We can do a 12-month bank statement loan. I've got lenders that'll do a P&L, an accountant's letter. I mean, there's a variety of ways that we can try to get people qualified.
So on the bank statement loan, a lot of us that are growing our short-term rental business, and we can kind of show the rental deposits consistently over several months. So that we could do that instead of doing tax returns or anything else.
We can. It would be very helpful to just specific bank statements for that particular property. And technically, each property should be in its own LLC, which has its own bank statement. So if the income comes in from the short-term rental goes into the bank statement, then we can use the bank statements for qualifying.
Got it. They were saying there's a little bit of an echo, David, so I'm going to mute my line when you're talking and see if that makes a difference.
Okay.
And yeah, and so let's talk about that for a minute. So if I'm brand new to investing and I want to buy my first property, what's the best way to kind of get started with that from a asset protection standpoint, and the best way to set it up in the beginning? If I'm planning on doing multiple of these and kind of this is my starting point, what would you recommend?
Well, if it were me, what I would do would be to take each individual property, put it in its own LLC. And if the address of the property is 123 Main Street, I would form an LLC, 123 Main Street LLC. Go to a bank, create a bank account. And generally, if it were me, I would take the LLC and make that owned by a minimum of an S corp. And then I would take another LLC and I would put a lien against the property that I'm buying, because that gives a lot of asset protection. Because if somebody were to, say, fall through some steps and hurt themselves and then they went to sue you, there would be a lien on the property, and an attorney, if the attorney could pierce the LLC, then he would be able to go after the individual. But if the LLC is owned by an S corp and there's a huge lien against the property, which doesn't require any payments and it's just a lien, then the attorney's going to go, well, that property is useless if we're not going to get any money, and he would not take the case.
So let me get this straight. I'm going to create a separate LLC and place a lien on my property with that separate LLC that I'm still a partner. I was the one that created that. Is that what we're saying? And
I would re-record it once a year just to keep it active.
So when they do an asset search, they're not able to determine the amount of that lien. Like if it's a lien for $50,000 or $100,000, they're not able to see that information.
Well, let's say it's a $500,000 house and there's a $400,000 mortgage, I would take another entity and put a $400,000 lien against the property, so that if an attorney were to look at it, the only money that would be available would be whatever the renter's insurance covers.
I see. And then that other lien would be in second position to the first mortgage, though, correct?
Well, it would just be a lien.
Just be a lien.
Not
okay.
a mortgage. And this is a lien that you can just satisfy and remove anytime you want, because you own the lien. It's just asset protection.
Got it. Very interesting. I think that's the first time I've heard that, but that's definitely something that makes sense for sure.
Right.
Yeah, that's very helpful. And then what else as far as structure goes?
I think it was last week you had a question regarding doing a blanket portfolio. Again, each individual property should be in its own individual LLC. If you've got 20 or 30 properties, each one, if they're in their own LLC, then it would be time to get a portfolio loan. But not when you're initially. And
so if I were to buy 20 properties, it would be similar terms. I'd need to come up with 20% down, correct?
If you were doing acquisitions, yeah. Unless there was a way that you could buy out the existing note with another note. And I don't want to get too complicated, but there are other maneuvers that you might be able to do.
Well, I think that's I think that's the other benefit as well of doing separate LLCs in your real estate portfolio, because it doesn't that also give you the option, if you sell that property, you could basically sell that LLC without that individual getting another mortgage to buy the property, and you're basically transferring ownership of the LLC. Is that another advantage of doing that?
Absolutely. Absolutely.
Okay.
Absolutely.
All right. And then, so if, again, to back up again on the strategic or flexible ways to get financing, are there some other examples besides bank statements that are one way of getting approved for an acquisition loan?
I don't like to do W-2s or tax returns because it opens the door up for a lot of questions as far as the underwriters go. The simplest ones are no doc. Those are the easiest ones. They're typically maybe 0.5% higher in the interest rate, but there's no questions that are asked. Then you're based on the credit score, the property, clear title, appraisal, and you're done. Of course, it may not always work out that way, but there's always holes that we fall into here and there.
Well, what are some of those holes?
Yeah. Well, for an example, let's say you buy a piece of property and it's got 5 acres. Typical lenders don't want anything more than 2. Another situation might be if you buy a piece of property and it's not in a very populated area. The lenders are not going to like that either, because remember, the lenders are using the property as collateral. And just because you're using it as a short-term rental, the lenders don't take the rental into consideration, because if they have to foreclose, they're not going to rent the property. They want to sell it. So it's the value of the property that they base their loan on.
Okay. So you brought up a good point. I have seen and have seen some lenders out there that are actually recognizing the short-term rental revenue versus the long-term rents property. Do some of your lenders do that as well?
They do. Recently, I've run into a situation where we had a very high short-term rental income, but the appraiser wasn't all that familiar with STRs. So what he did was he reached out to a couple of realtors and he asked the realtors what would the typical rental income be for that property. And this individual was making close to $30,000 a month in short-term rental income. The appraiser said the typical rents in the area are $8,500. Well, that threw the whole appraisal off, because you got the value, you got the cost approach, and you got the income approach. Well, that threw the income approach way off on the value of the appraisal, so I had a major issue with that. So where I thought I could go with the loan with a particular lender, I ended up having to go to a different lender. They had different criteria. So that's one of the benefits, I think, of working with a mortgage broker, because we have not only the experience, but we have a wide range of products and lenders that we can go to. And one of our jobs is to take the information in that we get from a client, basically underwrite it, and then match that with the lending criteria for the lenders. And then we look, okay, well, it doesn't go with A. Let's go to B. Let's look at the criteria for B. If it matches with B, then we'll try to, we'll communicate with them. We'll talk to the underwriters and tell them what we have, and then we'll submit the package there.
Very cool. So you've got multiple options. If you stumble to different roadblocks along the way, you can kind of look at other opportunities and other options as a way to get it done. Are there any options besides acquisitions? Do you have any like bridge loan options or secondary lien options, equity line options?
We do have bridge loans. And from time to time, I can get a second mortgage done. But in this marketplace right now, especially, it's like pulling teeth. You're almost better to go with I hate to say this, but a typical bank to see if you can get an equity line with them. But of course, then you got to be the high credit score, the provable income. It's a bank loan.
And so there's not a whole lot of unsecured lending options out there that you know of.
Not in this market today. No.
Okay, I actually do have some options that we've been working with a company that specializes in doing business credit. And so we're probably going to have another weekly call like this that does a deep dive on that kind of helps people that want to have, if you need cash for the down payment, that 10% or that 20% down payment money, there's ways to kind of get that through business lines of credit. And so those parlay nicely with the acquisition loan, because then we're not required to, have it secured by property, and it gives that investor the ability to be liquid. And in a lot of cases, if the FICO is at a minimum of maybe 650 to 680, your starting point is, potentially 50 to 100,000 in business credit, which is typically going to be promotional stuff where it's 0% interest for the first 6 months. And so it works pretty well with an investment strategy. So stay tuned for that.
Depending on what county, you may be able to qualify for a grant for your down payment.
Really?
Yes.
And so what is that? So that's more than just like first-time home buyer. There's other types of programs?
Yes. And I'm not that familiar to speak fluently about it, but I do know that they're out there.
All right. Well, that would be good to get some more details on that. To be able to have that as an option. I know that that's something that was pretty popular in the past, but I didn't realize it was still an option today. So, okay. All right. What else can we talk about when it comes to, that's very interesting with the legal entities separate for each property. Are there any other kind of recommendations or pointers for protection as an investor?
Well, I just really need to state that I'm not a tax accountant and I'm not an attorney. So what I give are my opinions. So if somebody wants to do that, they have to get the proper channels for that. But I also want to mention that not only do we do single families up to 4 families for investors, we can also do 5, 8, and plus in the units. We also can do apartment buildings. We've got commercial money that's available to us. We can do hospitals, industrial areas, home care centers. I'm working on a used car lot right now. So, there's money that's available. It's just a matter of knowing where to go for it.
Raw land and new construction.
I can do new construction, but just doing a loan on raw land, not so much. You got to put down close to 50%.
50%. Okay.
Right.
But if you already own the land and you're doing new construction, what do the terms look like for that?
That's basically like a fix and flip, but you're starting from the ground up.
So very similar terms then?
Yes. Again,
Okay.
you're making payments just on the amount that's drawn down.
Got it. So I know we have quite a few of you guys watching. If you have any questions, feel free to throw them in the comments as we continue chatting here. We'll try to cover any specific questions that you guys might have for David on mortgages and on the requirements to get a loan. And so talk to us, David, about once you've got your rehab done and you're still in that property, but you, instead of flipping it out, you want to refinance and keep it as a long-term play, as a short-term rental. What are the, how does that work? How does the refinance get qualified? What do they look for typically? And just so that you can have a good understanding of what that looks like.
Okay. First, I would start out when I first get with an investor, I'd like to ask them, are you going to hold the property or are you going to flip it? Because there's two different ways that I can get financing. I can do it as a fix and flip, or I can do it as a fix and hold. So that eliminates the need to have to refinance a fix and flip loan because now it's a fix and hold. So it was only one closing.
And what do the terms look like on a fix and hold?
Very similar to the fix and flips. It's just a matter of being a 30-year loan once it converts after it's been done rehab.
And it would be at similar. What are the interest rates going for on those now?
Those are in the high sevens, typically, as long as we got decent credit and the property, it has to be minimum loan is $100,000. I really don't have any limit on what I can do. If it's a fix and flip, the limit would be $2 million, but I have access to unlimited funds. Oh, I'm also working on a cannabis project too. So there's commercial money available. It's always available.
Is the cannabis project here in Georgia?
No, it's in Illinois. We lend nationwide too, by the way. And we got three loans, so we got plenty of opportunity to work quickly and get your loans done.
Got it. So you are able to handle loans across the United States.
Correct.
And is there any advantage or any differences in state by state, or is it all pretty similar as far as the requirements go?
It's very similar. Very similar. A few states like California require more documentation and more disclosures, but other than that, the loan process is the same.
Got it. All right. As we get close to closing out here, is there anything else that we should be, touching on based on your experience to help folks that are kind of starting to dive into doing acquisitions a little bit more aggressively?
Well, the only thing I could talk about would be the actual flow of money, where all these lenders typically are ex-bankers that have been in the business for a while, and now they decide they're going to open up a mortgage company or finance company. What their connection is typically a hedge fund, and the hedge fund will negotiate with the lender and tell them, well, if you give me criteria like this, and this, which is the loan to value, the credit score, the location of the property, the loan to value, if it's going to be rehabbed, what the after repair value has to be. And then what the lender does is the lender goes out and they advertise for business. They contact mortgage brokers and they say, hey, send us your business. And then what happens is we send them the business, the lender closes it, and then they immediately would transfer it over to the hedge fund. And once the hedge fund has a portfolio of 10 or $50 million, then they convert it over to a CMO or collateralized mortgage obligation. And then they put it on the stock market and they generate income from there. And what the lenders basically don't have, some lenders don't have any money. They just have like a little line of credit so that they can actually table fund, turn around, sell it to the hedge fund, and they get their money back from the hedge fund. It's all just a flow of money.
And that's what got us into trouble in 08 when everything collapsed, right?
Correct. Yep.
All those loans they were just handing out to anyone that has a pulse.
Exactly. Citibank, Gibraltar, there were a few. They put a mirror under your nose. If it fogged up, your loan was approved at 75%. Boom, no questions asked. And yes, as brokers, we did take advantage of it.
What's your forecast, or from where you sit? Where do you think it's going the next year or two with interest rates and the economy and the recession?
Well, I stay very close to watching what's going on with the feds right now because they're trying to get into this digital currency. I think it's going to be a disaster. I would encourage any investors right now that are interested in getting in to get in now, because in a few months, I don't know what's going to happen, but I think we're going to lose some of the access to some of the funds that we have now. So I would encourage any investor to get into the market now, because then it'll be cash flow money in their pocket that the government really can't take away from you.
So I knew that the government was looking at the digital currency for some of their departments. I didn't realize it was going to impact kind of the mortgage world, though.
Unfortunately, they want to control the money. And there's a ton of money in the mortgage market. So I don't know what they're going to do, but if there's an investment opportunity, investors should take advantage of it.
Well, I mean, I've always been a proponent of, no matter what's going on with the interest rates or the economy, you should always be opportunistic and seize opportunities as you're able to get them. Is the way I've always operated. Yep. Instead of sitting on the sidelines unnecessarily, because there's never going to be a perfect time, right? So
that's true. And just for investors that are just starting out, when they're looking at a piece of property and they figure out their ROI or return of investment, personally, if my return of investment is 24% or less, I either wholesale it or I'll flip it. If it's 25% or more, I would consider holding it, because that's good income for a return.
Yeah, that makes sense. There's some investors that'll go as low as 15 to 16%, but we try to be 20% or north of that for sure as a hold.
Right.
That makes sense. All right, so David, what's a good way for folks to reach out to you if they wanted to get more details?
Well, we do have a website, but I prefer to have people call directly, because it gives us the opportunity to establish a one-on-one communication. We ask them questions, they ask questions, and then we get a rapport going. Once I talk about what they want, then we know exactly what documentation we're going to need from them, and then we email it to them, and then they complete what we need completed, return it, and then we have a loan in process.
All right, so you're okay with me throwing out your direct line to everybody here?
Please.
Okay, perfect. So let me do that real quick. Anything else to add before we close it out?
No, actually, typically we like to close between 25 and 30 days. It really depends on how quickly we get the documentation that we need from the investor. We can deal with, in certain cases, we can deal with BKs, foreclosures, deed in lieu of foreclosure, modified mortgages. Loan to values are lower, but we can get them done.
Awesome. So David, I really appreciate you taking the time this week. I did put your number out in the comments, so feel free, guys. Reach out to David. I've done a lot of business with him over the years, and he's a long-term player. Let him know that you're a part of B&B Investing Group when you reach out to him, and he'll definitely take care of you. So thanks again, David. Appreciate it.
Thank you.
And then just a reminder for B&B Investing Group, if you guys need any assistance with acquisitions or master leasing or managing short-term rentals, growing and scaling your business, feel free to reach out to me directly, typically on Facebook with a direct message, and we'll schedule some time to chat and see if our program is a good fit for you guys or not. So until next week, thanks everybody for joining, and we will see you again soon. Thanks again, David. Take care, buddy.
Okay. Bye-bye.
Thanks for jumping on the BNB Investing Podcast this week. Please click on the subscribe and like button below. For more trainings, property tours, and content, you can join my BNB Investing Facebook group by clicking below. If you are ready to grow your short-term rental portfolio and maximize your monthly income. You can click on the link below to schedule a quick strategy call with Rich or someone from his team to see how we can help or point you in the right direction. Stay tuned for our next episode and hope to see you on the BNB Investing Group podcast.